Sunday, 22 February. 16 days ago, Bitcoin printed a single candle that ran from $60,000 to $71,708, a range of $11,708 in one session. That candle has been casting its shadow over every session since. In the 16 days that followed, the market compressed steadily and silently inside that single bar, session by session, range by range, until Saturday closed with a daily range of just $1,210, 10% of the dominant bar. The coil is tighter now than at any point since the 6 February reset, and the tension is visible at every time frame. Something resolves from here. The question is binary. Does Bitcoin break upward toward the $71,708 high of that dominant bar, and beyond it the $72,243 shooting star peak of 8 February, or does the coil release to the downside, driving price back toward the $60,000 low that defined the bottom of the 6 February range? Bitcoin currently sits at $67,973, 68% of the way up that dominant bar. Positional advantage to the bulls, but structure decides, not position. This is Price Action Traders Crypto. Every day, same time, we break Bitcoin down the same way. 5 questions, no noise, no hype. Where are the levels? Who controls the week? Where is the midpoint? What are the binary outcomes, and what invalidates the entire structure, the line in the sand? Subscribe and turn on notifications. The higher time frame context frames everything. The 2026 yearly candle opened at $87,626, reached its annual high of $97,900 in the first 2 weeks of January, and has since retreated to $67,973, a 22% decline from the yearly open in less than 2 months. The yearly midpoint sits at $78,950. Bitcoin is $11,000 below it. The 2026 yearly candle is a bearish structure, high set early, close grinding lower, midpoint not reclaimed. That is the macro backdrop against which every weekly and daily move must be read. February sharpens the picture. The month opened at $78,744, swept to $60,000 on 6 February, and has since recovered to $67,973. The monthly midpoint is $69,672. Saturday's close sits $1,699 below it. December closed below its monthly midpoint. January closed below its monthly midpoint. February is tracking the same outcome, a third consecutive bearish monthly midpoint close. The higher time frame does not support an easy bull breakout. It supports range continuation unless Bitcoin reclaims and holds $69,672 on a sustained daily close basis. The weekly chart tells the compression story clearly. The reset week of 2 February produced a $19,284 range, sweeping to $60,000 and recovering to close above its midpoint. The week of 9 February was the first inside week. Range compressed to $6,258, closing above its midpoint at $68,788. The week of 16 February compressed further to $4,471, a lower high at $70,092 and a lower close at $67,931. 2 consecutive inside weeks, lower highs, lower closes, the ceiling descending, the floor at $65,621 holding, and now Saturday has opened the new week with a $1,210 doji sitting just $116 above the weekly midpoint at $67,857. The coil is engaged at every time frame simultaneously. The last 14 days are best read not as a price sequence, but as a candlestick story. 7 distinct patterns, each one a chapter, together explaining how Bitcoin arrived at Saturday's doji at maximum compression. It begins with the 6 February dominant bar, a wide-ranging bullish candle whose body accounts for 66% of the $11,708 range. The lower wick swept $60,000 and rejected it immediately. The close in the upper third of the range signaled complete buyer control. This candle set the outer boundaries, $71,708 above, $60,000 below, that every subsequent session has traded inside. The following day printed an inside bar, the market pausing to absorb the move. Containment established from session 1. Sunday, 8 February, delivered a shooting star. Price pushed to $72,243, the only session to exceed the 6 February high, before fading to close at $70,302 with a long upper wick of $1,941. A shooting star at the high after a strong advance is a textbook bearish reversal signal. The ceiling at $72,243 was confirmed and rejected in the same session. That high has not been challenged since. Monday, 9 February, followed with a spinning top. Body just $267 on a $3,111 range. Wicks extending in both directions. Pure indecision directly after a shooting star rejection. Not neutral, a warning. The burden of proof had shifted to the bulls, and they were spinning at the top without conviction. The warning was confirmed across the next 3 sessions. Tuesday, 10 February, Wednesday, 11th February, and Thursday, 12th February formed a 3 black crows pattern. 3 consecutive bearish candles, each opening within the prior session's body, each closing progressively lower. $68,783, then $67,048, then $66,238. By Thursday, the low had reached $65,127, the deepest penetration toward the 6 February floor since the reset. Organized seller control. No ambiguity. The 3 black crows confirmed the shooting star's verdict. Friday, 13th February, answered with a bullish engulfing, opening below Thursday's open, driving aggressively higher, closing at $68,811, with the bullish body completely consuming the prior bearish body. The 65,000 zone had been tested twice in 2 days and held both times. The floor was speaking, but the recovery was quickly challenged. Sunday, 15th February, produced a bearish engulfing, the bearish body consuming Saturday's small bullish candle entirely. 2 engulfing candles facing each other across the weekend. Buyers defending the floor on Friday, sellers capping the recovery on Sunday. The coil boundaries confirmed from both sides. Buyers at $65,000, sellers at $70,000. Monday, 16th February, produced a near-perfect doji, a body of just $91 on a $2,821 range, the upper wick reaching $70,092 and the lower wick to $67,271. Pure indecision at the first serious test of $70,000 in the new week. Buyers pushed to the ceiling, could not close above it. The doji at the ceiling confirmed the ceiling. 2 clean bearish sessions on Tuesday and Wednesday followed. No pattern, no indecision, just organized selling pressing the range lower from the failed ceiling test, ranges contracting to $2,615 and $2,587 respectively. Thursday, 19th February, printed a hammer, lower wick of $785, more than double the body of $545, close at $66,951 at the top of the session, the low reaching $65,621 before buyers rejected the move completely. A hammer at the low of a sequence after multiple bearish sessions is the market refusing to close at the lows, the second defense of the structural floor. Friday, 20th February, followed the hammer with a strong bullish session, closing at $67,982, the opening of what looked like a 3 white soldiers building from the defended low, momentum returning to the bulls, the weekly midpoint reclaimed. Saturday, 21st February, answered that setup with a doji. Open $67,996, close $67,973, a body of just $23 on a $1,210 range. The third white soldier never arrived. Instead of continuing the bullish momentum, Saturday stalled into pure indecision on the tightest range of the entire sequence. 2 white soldiers and a doji, not a confirmed upside resolution. The bulls built momentum off the hammer, reclaimed the weekly midpoint, and then ran out of conviction at precisely the point where they needed to press. The doji on $1,210 is the coil at maximum tension. It is asking one question: which side picks up where Saturday left off? 7 patterns. The dominant bar sets the boundaries. Inside bar absorbs the move. Shooting star rejects $72,243. Spinning top warns of exhaustion. 3 black crows confirm the reversal. Bullish engulfing defends the floor. Bearish engulfing stalls the recovery. Doji marks the failed test of $70,000. Hammer defends $65,621. 2 white soldiers build momentum. A doji on $1,210 kills the 3rd soldier. The coil is fully wound. The next candle delivers the verdict. The macro explains where the compression has held this long without resolving. The US dollar index has been consolidating near recent highs throughout this period. No acceleration of pressure, but no softening either. That macro indecision mirrors Bitcoin's price action almost precisely. A dollar holding steady caps Bitcoin's recovery while also preventing collapse. When DXY resolves its own consolidation, Bitcoin's coil resolves with it. U.S. technology stocks have maintained relative strength throughout. The pressure on Bitcoin has been asset-specific, not broad risk-off. And the spot ETF structural bid is what held $60,000 on 6th February. Systematic institutional demand that does not panic, accumulates on weakness, and produced the hammer and the bullish engulfing at the structural lows. The Federal Reserve remains on hold. No rate catalyst in either direction. The macro is holding Bitcoin in place while the coil tightens. When it breaks, the coil resolves. 3 levels control the structure going into the new week. Bull case. A daily close above $70,092 breaks the ceiling that has capped every recovery attempt across 2 consecutive weeks and opens the path towards $71,708, the high of the 6th February dominant bar and the structural ceiling of the entire range. A close above $71,708 on meaningful volume is the clearest bull signal available, pointing toward the $72,243 shooting star high of 8th February. Bear case. A daily close below $65,621 breaks the floor the hammer defended on Thursday, removing the structural support that has held the compression from below and putting the prior week's low at $65,127 immediately in play. A break of both lows in sequence opens the path toward a retest of $60,000, the structural floor and 6th February dominant bar low. A second test of that level within the same month is a materially different structural event than the first. The line in the sand? $67,857, the weekly midpoint. Saturday's doji closed $116 above it. A Sunday open below $67,857 tells you bears have reclaimed midpoint control before the new week has started. A hold above it keeps buyers in technical weekly control for a 3rd consecutive week. Watch this level before anything else. $70,092 and $71,708 above, the ceiling and the dominant bar high. $65,621 and $60,000 below, the hammer floor and the structural low. $67,857, the weekly midpoint, the line in the sand. The doji closed $116 above it. The coil resolves between $71,708 and $60,000. The Sunday open tells you who controls the week before it starts. 16 days, 1 dominant bar, 7 candlestick patterns, a coil at maximum tension closing Saturday on a $1,210 doji directly on the weekly midpoint. The structure has told its story clearly. You now have the complete picture. If this briefing gave you clarity, hit the like, drop a comment with the level or the pattern you are watching as this coil unwinds, and subscribe to Price Action Traders Crypto. The daily structure map goes up every evening at the same time. Share it with one trader who follows Bitcoin. It costs nothing and it helps more than you know. Trade what you see, not what you think. Good trading.